In this lesson today, we are going to use what are called T accounts to analyze transactions. This chapter is very important as the basis of our accounting system. There are times that may seem really confusing, but by the end of the chapter, it should be a little clearer to you once you see the big picture. So just stick with it and you'll understand as we go along here. Like I said, it might be a little confusing to start with. And you've already learned how to analyze transactions using the accounting equation. That's what we did last chapter. This chapter, we're going to introduce another step in analyzing these same transactions. And again, this isn't our final for our accounting system, but it's a way to start analyzing these transactions in our head. So when we get to the journal papers, it becomes a little easier. The procedures of recording transactions in an accounting equation is not practical. Like we did in chapter 1, this would affect a lot of accounts and you would have tons of paper recording it this way. So in turn, this chapter, a separate record is used for each account. So remember, our accounts are, one account is called assets, one account is your supplies and so forth. We're going to keep records for those separate accounts. If you look at this will be our final journal when we start journalizing it. Rather than using T accounts or just the accounting equation, it looks something like this. But in order to understand all of these columns and where the numbers go, we have to go through a period of analyzing in our heads. An accounting equation can be represented as a T. And so it looks like that. We have our assets equals liabilities plus owner's equity. And you can see where the equal sign lies is in the down bar of the T. The value of what you own, the assets, is on the left side of the accounting equation. And claims against these assets, liabilities and owner's equity, are on the right side. And that's real important to know because this will be the basis of our account balances. So again, the left side of your accounting equation, the right side, and it's going to be analyzed in an account called a T account, and you can see why it's called a T account. Remember, our accounting equation must always equal. An account then is a record summarizing all the information pertaining to a single item in the accounting equation. Again, one account could be your capital account, one account could be your accounts payable, one account your prepaid insurance, and so forth. A transaction then, as a review from chapter 1, is an activity that changes assets, liabilities, or owner's equity. Paid cash for something, received cash for something. Those are all your transactions. A T account then is an accounting device used to analyze these transactions. And again, we're using this to analyze it so that in the next chapter or so, when we start using the accounting journal paper, it becomes a lot easier. A debit then is an amount recorded on the left side of a T account. So if you record something on the left side of a T account, it's called a debit. A credit, on the other hand, is an amount recorded on the right side of a T account. So no longer will we say the left side or the right side of an account. We'll be seeing debit for the left, credit for the right. Common abbreviations is DR for debit and CR for credit. Okay, so you'll take a look at your account just as a review. The left side of the account, the T account, is the debit side, and the right side is your credit side. Assets are on the left side of the accounting equation, therefore they increase on the left side or the debit side of the account. So you have any asset there. It could be your cash, your supplies, your prepaid insurance, your accounts receivable. Those are all your assets, and you can see that they lie on the left side of the accounting equation. They are on the left side of the T account. Every account, remember, the debit side is the left side, the credit side is the right side. And according to this statement here, it says assets are on the left side of the accounting equation. Therefore, assets increase on the left side or the debit side of the accounting equation. Okay. And again, if you seem a little confused right now, it becomes a little bit clearer as we go along. Liabilities, on the other hand, are on the right side of the accounting equation. You can see the accounting equation there. So any liability, like your accounts payable, the people that you or the businesses that you're going to be paying at a later date, they are on the right side of the accounting equation. All of your accounts, remember, the debit's on the left side, the credit's on the right side. Since they fall on the right side of the accounting equation, they will increase on the right side of the account, which is the credit side. Owner's capital is on the right side of the accounting equation. Okay, so again, your owner's equity, the account under there is your capital account. Again, with each account, the left side is the debit side, the right side is the credit. Since the capital account falls on the right side of the accounting equation, it has a right side balance. The right side of your capital account is your credit. So the normal balance then is the side of the account that is increased. So wherever your increased side is, that's where your normal balance. And the normal balance, for example, is what is the balance in each of these accounts? Okay, your normal balance is either a debit or a credit. So let's take a look at what we had from before. Assets have a normal debit balance because they increase on the debit side. Okay, so your normal balance is going to be on the side of the account that increases. Just think like if you have money in your account and you put more in there, it's going to increase on that side. Any liability is on the right side of your accounting equation. Remember, it has a right side increase, which is credit, so the normal balance is on the increase side of that account. Your owner's capital has a normal credit balance because they increase on the credit side. And again, this may sound a little confusing, and you'll see how it all fits in there. The sides of the T accounts are used to show increases and decreases in account balances. Two accounting rules regulate the increases and decreases of an account balance. The account balance increases on the normal balance side of an account, and the account balance decreases on the opposite of the normal balance side. So when we look at our accounts from before, remember our assets are on the left side of the accounting equation. They have a left side normal balance, which is debit. On the right side of our accounting equation, we have liabilities and owner's capital. They have a right side balance, and that is a credit. Remember, the debit and credit sides always are the same. Debit's on the left, credit's on the right of every account that we have. Okay, going back to the rules now, we always increase our balance on the normal balance side. So we're going to increase on the normal balance side, decrease on the opposite. We go to our liabilities, increase on the normal balance side, decrease on the opposite. And just think of it, you have a balance in there. You want, if you're going to add money to it, you're going to keep adding to that balance. That's why you increase on the normal balance side. Your owner's capital account has a normal credit balance. You're going to increase on the normal balance side, decrease on the opposite. So if you look at this, let's take a look at the supplies that we have on the second line. Supplies is an asset, again with a normal debit balance. So if you look at that number under general debit, that $3,000, just by knowing what we know right now, if we were going to debit supplies, which is an asset, that means that our supplies is going up. Instead of saying increasing our supplies, by saying we're going to debit our supplies, it's going to go up. We know, after a while anyway, that that's going to go up. And we'll analyze our journal after we start getting the hang of our increases and decreases. Okay, so next we're going to take a look at 2-1. Just as a review, you can see all of our accounts are listed here with a T account. we have our assets lined up here, we have our liabilities here, and our owner's capital account. Remember now, our debits are always on the left side, credits on the right. Since this is an asset, we're going to increase on the debit side, decrease on the credit side. Our normal balance is our debit side. The cash or our assets fall on the left side of the accounting equation, so therefore it has a left-hand balance, which is a debit, increase on the normal balance side, decrease on the opposite. And you can probably guess the rest of your assets are the same. Debit and credit's always the same. It's an asset. It increases on the debit, decreases on the credit. Our normal balance is a debit. Supplies, again, another account. The debits are on the left, credits on the right. Increase on the debit, decrease on the credit, because our normal balance of an asset is the debit side. And the same thing with prepaid insurance. This is an asset. You'll notice all of our assets, normal balance, debit side, they're found on the left-hand side of the accounting equation. Therefore, they have a debit balance, increase on the normal balance side, decrease on the opposite. Accounts payable, on the other hand, up here, we have two accounts payable accounts. Those are liabilities. They fall on the right-hand side of our accounting equation. Okay, with our T accounts, our debit and credits, remember, are always the same side. Debits on the left, credits on the right. We increase on the normal balance side. Since liabilities have a normal credit balance, we're going to increase on the credit, decrease on the debit side. Our second accounts payable, debit and credits, always remain the same. Debits on the left, credits on the right. It is a liability. It has a normal credit balance. It follows on the right-hand side of our accounting equation, so therefore it has a credit balance. Our capital, normal debit, credit sides. Our capital account falls on the right-hand side of our accounting equation, so therefore it has a right-hand balance, which is a credit. We increase on the normal balance side, we decrease on the opposite side. All right, so your assignment is from your online book, but don't stop here. Don't stop the video right here. Here is the list of your assignments, but I'd like you to continue on because I do explain a couple of things on your assignment, which might make your assignment just a little bit easier. So make sure you listen to the rest of the video, and that will help you with your assignment. But your assignments are listed here, and they will also be listed on your Canvas homepage. When you work with this one, your audit your understanding. On the first question, it says, draw the accounting equation on a T account, upload it. What I would like you to do is just to type in the accounting equation and then submit that one. On question 2, again, it's the 2 accounting rules on how increases and decreases affect your account balances. When you get to your work together and on your own, if you take a look at this, I'll give you a hint here. So what you're going to do, it says for each T account, label the debit and credit sides. So remember, for each account, the left side is your debit side, your right side is your credit. And then it says select increase on the increase, decrease on the decrease, and identify the normal balance. What I like to do is identify, first of all, the normal balance. So cash is an asset. It is on the left side of your accounting equation, so it has a left side balance. So the left side balance would be a normal debit balance. Remember the rules for increasing and decreasing? You always increase on the normal balance side. So I just wrote the normal balance side as a debit. So I'm going to increase on the normal balance side. I'm going to decrease on the opposite of my normal balance. So it might be easier to identify your debit credit sides first, your normal balance second, and then go for your increases and decreases there.